Hello, my name is Ariana Dumber, and my topic for project number 3 is government spending and fiscal policy. In this presentation, I will be discussing topics such as government income and spending and how that affects the general American in 2026. I have separated the topics of today into 4 categories. Number 1, types of taxes; 2, where the taxes go; 3, 2026 spending controversies; and 4, my connection to my Econ 2201 class. To start, I will be discussing the kinds of taxes that Americans pay. To begin, I am going to talk about income-based taxes, which are one of the main ways that the government generates revenue. Income-based taxes are important because they are directly tied to how much people and businesses earn. This means that as income increases, the amount of taxes paid generally increases as well. Because of this, income taxes make up a large portion of the federal government's total revenue. The first form of tax is individual income tax. This is the tax that most people are familiar with. It applies to money earned from wages, salaries, dividends, and interest. For Americans, this is the biggest form of tax that they pay. It's also structured in a progressive way, meaning people with higher incomes typically pay a higher percentage of their income in taxes. This system is designed to make taxation more equitable based on the ability to pay. Next is corporate income tax, which is applied to the profits that businesses earn. After companies subtract their expenses from their revenue, the remaining profit is taxed. This is important because it ensures that businesses contribute to funding public services like infrastructure, education, and national defense. However, corporate taxes can also be debated in economics because they influence a business's decisions, such as investment, hiring, or where companies choose to operate. Another kind is capital gains tax. This is a tax on the profit made from selling assets like stocks, bonds, or real estate. For example, if someone buys a stock for a certain price and then later sells it for more, the profit they make is considered a capital gain and is taxed. Capital gains taxes are important because they affect investment behavior and influence how people choose to grow their wealth over time. Finally, there's alternative minimum tax, or AMT. This is a separate tax system designed mainly for higher income individuals. It ensures that even if someone qualifies for many deductions, credits, or loopholes, they can still pay at least a minimum amount of tax. The goal of AMT is to prevent very high earners from avoiding taxes entirely. Overall, income based taxes are a key part of the federal budget because they provide a major source of revenue. The amount collected through these taxes directly affects how much the government can spend and whether it runs in a deficit or a surplus. This connects back to national debt, since a lower tax revenue or a higher spending can increase deficits and add to the total debt over time. Next, we're going to be looking at different types of consumption taxes, which are taxes people pay when they buy goods and services. First, we have sales tax. Sales tax is the most common. It's a percentage added to the final price of an item at checkout. So whenever you buy something at a store, you're usually paying sales tax. Next is excise tax, which is a tax on specific goods like gasoline, alcohol, tobacco, and airline tickets. These are often used both to raise revenue and sometimes to discourage certain behaviors like smoking and drinking. Then we have value added tax, or VAT. This is tax placed on a product at each stage of production, based on the value added at that step. While it's common in many countries, the US mainly uses sales tax instead. Lastly, we have use tax, which applies when you buy something out of state and bring it back to your home state without paying sales tax at the time of purchase. Overall, these taxes are important because they directly impact how much consumers spend and also generate a significant amount of revenue for the government. This slide focuses on payroll taxes, which are the taxes taken directly out of workers' paychecks. The most common type of payroll taxes are for Social Security and Medicare. These are automatically deducted from your earnings and go towards federal programs that provide retirement benefits, healthcare for seniors, and support people with disabilities. Both employees and employers could typically contribute to these taxes. Recently, there has been some debate on whether or not employees should still have to pay these Social Security and Medicare taxes because some critics believe that Social Security and Medicare programs may not be around when the employees that are paying for them would need to use them. Another tax most Americans need to pay is unemployment tax. This is mainly paid by employers and is used to fund the state unemployment insurance programs. These programs provide temporary financial assistance to workers who lose their job. Overall, payroll taxes play a key role in funding essential government programs that support people during retirement, unemployment, and times of need. Even though they reduce take home pay, they provide long term financial security and stability for many individuals. Next, we have property and asset taxes, which are based on what people own rather than what they earn or spend. First is real estate tax, which is an annual tax on the value of land and buildings. Homeowners pay this regularly, and it helps fund local services like schools and infrastructure. Next is personal property taxes, which applies to movable items like cars, boats, or business equipment. We also have the estate tax, which is placed on the total value of a person's money and property after they pass away. Closely related is the inheritance tax, which is paid by the person receiving that money or property. Finally, the gift tax applies when someone transfers money or assets to another person without receiving the equal value in return. Overall, these taxes focus on wealth and ownership, and they play a major role in funding government services while also helping regulate the transfer of taxes assets between individuals. Here we have a list of miscellaneous taxes that don't necessarily fit into one category. One of these taxes that stands out to me is the tariffs and customs duties. This is because in recent days we've seen a little bit of controversy regarding tariffs. This chart shows the main sources of tax revenue in the United States, the largest portion coming from individual taxes, making up about 41% of revenue. Overall, this shows that government revenue comes directly from individuals, either through income or payroll taxes. This means that when governments make decisions about what they're going to spend that money on, it is really important for a lot of Americans because it's their money. Next, we're going to discuss government spending, which is essentially how the government spends the money that they earn from taxes. To start, we have mandatory spending, which is government spending that is required by existing laws. It mainly funds entitlement programs like Social Security, Medicare, and Medicaid. These programs automatically receive funding based on eligibility rules, rather than needing approval each year. Mandatory spending makes up about two-thirds of the federal budget, which shows how significant it is. Overall, this type of spending is consistent and predictable, but it also limits how much flexibility the government has when creating new budgets. Some examples of this include Social Security, Medicaid, Medicare, and other programs that assist people in need. Now we have discretionary spending, which is the part of the federal budget that Congress decides on each year. Unlike mandatory spending, this type of spending must be approved annually through appropriation bills, so it's more flexible. Discretionary spending includes areas like national defense, education, transportation, and homeland security. Overall, this portion of the budget is where the government has the most control and can adjust spending based on current priorities and needs. Some examples of discretionary spending include national defense, education, foreign aid, and other topics that may change depending on what party is in office and what party has control. One major controversy is the amount of money that the government is spending on welfare programs such as SNAP, EBT, Medicare, and Medicaid. According to the Center of Immigrant Studies, about 47% of non US resident homes use at least one welfare program, compared to the about 28% of US born households. Some critics argue that this may not be the most beneficial use of American dollars. Why should Americans have to pay for immigrants to live here? Especially when, according to the Institution of Taxation and Economic Policy, only 50% are actually paying taxes. When the Big Beautiful Bill was signed into law, many of the benefits non citizens were receiving were cut to be lower or completely gone. This does not mean that legal migrant U.S. citizens won't receive benefits. Only non citizen immigrants are affected. This means that more money can be spent on assisting Americans who are down on their luck and aiding them into financial stability. The government collects revenue through taxes and uses it for spending on programs like Social Security, healthcare, and defense. When spending is greater than a revenue, it creates a budget deficit, which adds to the national debt over time. From an economic perspective, this connects to fiscal policy, where the government uses spending and taxation to influence the economy. For example, running a deficit can help stimulate economic growth in the short run, especially during recessions. However, there are also trade offs and opportunity costs. Higher debt can lead to increased interest rates and place a burden on the future taxpayers. This also ties into the concept of long term versus short term decision making. While spending more money today can support the economy, the government has to consider sustainability and avoid excessive debt in the future. Overall, there will always be debate over when and where we should spend our money. However, it's important to remember that our main goal is keeping our society happy and healthy. Thank you so much for listening to my project for Econ 2201.